For the last 10 years, it's paid to go outside of Canada. The Morningstar Canada Index, which tracks Canadian stocks, lagged the Morningstar Global Markets Index by 3 percentage points a year, and the Morningstar U.S. Markets Index by a more eye-popping 6 percentage points a year. To put those in another perspective, if you had $10,000 to invest, you would have made $16,000 more putting it in the U.S. than in Canada in the last decade. And so, it's only logical to assume that investment managers here would have been better off going outside of Canada for stock ideas, right? Well, not for EdgePoint. Contrary to geographic expectations, it was actually their Canadian equity fund that did better than their global equity fund. EdgePoint Canadian Portfolio Series F gained 10.5% annually from 2014 to 2023, while EdgePoint Global Portfolio Series F was just behind at 10.2% over that same time. The team's superior knowledge of the Canadian markets paired with their high conviction style has led to some surprising results over the past 10 years. At the heart of EdgePoint's philosophy is understanding business risk. Leaders Ty Busada and Jeff McDonald and team bring a business owner mindset to investing, and in application, they tend to focus on companies that are suffering from an overreactive market. A long investment horizon and high conviction approach requires an equally high level of discipline to weather out the bad times. New investment analysts learn this mindset by first covering a list of Canadian companies under the watchful eye of both Busada and McDonald. As a result, the team possesses a very deep knowledge of the Canadian stock universe, which has actually aided the Global Equity Fund. Now, EdgePoint doesn't publicly disclose their entire portfolios, but there are still a few examples where their Canadian stock selection wasn't just good relative to Canada, but even against the rest of the world. Their top position in the Canadian portfolio was Fairfax Financial with a weight of 8.3% in September 2023. The global portfolio holds a more reasonable 3.5% position in the stock. Restaurant Brands is another stock with a weight of more than 5% in both funds. Not only have the two stocks outperformed the Morningstar Canada Index since the funds bought them, but they also beat the far more competitive Morningstar Global Markets Index. While these are just two examples, they help explain just why the EdgePoint Canadian Equity Fund stands out when you look at performance. And EdgePoint continues to be an outlier. For them, it's helped and not hurt to stay in Canada. For Morningstar, I'm Michael Dobson.